One of the easiest ways, if not the easiest way, to get rich within crypto and to become successful within this asset class is to DCA. What is DCA? DCA is dollar cost average, and we're going to dive into what DCA means and how it can make you rich within cryptocurrency. Hello everyone, my name is J1 General and welcome back to another video. If you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, as it always makes help the channel grow. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products anywhere from a course, a ticker, accessories, coins, t-shirts, jewelry, all of that good stuff. I'll leave a link in the description down below so you can get 10+% off your next purchase. And without further ado, let's dive into the video, because I feel like DCAing is the most simplest strategy you can adopt when investing, but it is actually the hardest. Why do I say the hardest? Because within the cryptocurrency asset class, if you are watching this video, you probably know about Bitcoin's 4-year cycle. And the reason why I say DCAing within crypto is hard is because a lot of tourists enter when Bitcoin is in a parabolic rally, and then all the tourists leave when Bitcoin's in a bear market, and that's it. The next time they want to buy is when Bitcoin's in its parabolic rally again. No one wants to wait and sit around for the long haul, because everyone wants to adopt this get rich scheme quick, which can happen in cryptocurrency, which does occur from time to time. And you hear stories like that investor who invested 6k into Bonk, that new Solana meme coin that just recently came out a couple of months ago, and he made 12 mil. That does certainly occur from time to time, but the real way and the most successful way to become rich within cryptocurrency is to DCA, is to dollar cost average. Yeah, a prime example of this is Michael Saylor. If you do not know who Michael Saylor is, yet you know about crypto, you probably live under a cryptocurrency rock, because Michael Saylor is probably the face of Bitcoin in this moment of time. And this is a graphic that shows all of the times that Michael Saylor has bought Bitcoin. Yeah, all of these green dots is the times when MicroStrategy, which is owned by Michael Saylor, he's the CEO of MicroStrategy. Every green dot is the time that Michael Saylor has bought and DCA'd into Bitcoin. And you can see that many a times he's bought when price was low, when price was up, back low, back up, all throughout the bear market and all throughout the accumulation phase of Bitcoin. And he's still buying to this day. He recently made a purchase just the other day. So a prime example of DCAing is Michael Saylor. And you can see, as I just previously mentioned, that he's bought the top and he's bought the bottom. But you can see that his portfolio is 36.7% up. Why is that so significant? Well, the term DCA derived because it is all about investing in the stock market, and the stock market was guaranteed to produce 10% returns on a yearly basis, right? And it's very difficult to defeat the stock market. I know there's a lot of elite traders out there that can defeat the stock market on a yearly basis, but for the majority, no one can really defeat 10% yield returns on a yearly basis. It's very hard to do so. And even with interest in banks, they don't yield you 10% return. So which is why investing in the stock market seemed glorious back in the day, because you can return 10% yield every year and that will compound, etc. But with Bitcoin, ladies and gentlemen, and I say strictly Bitcoin and not cryptocurrency, because cryptocurrency has to stand the test of time, and I'll show you some examples as to why. But with Bitcoin, no matter where you start, and Michael Saylor started before 2020, yeah, and it's been 4 years now, Bitcoin will generate you just monstrous returns just by DCAing. And Bitcoin is the number one asset within the cryptocurrency asset class, which doesn't supposedly give you the best returns throughout all of cryptocurrency. Yet it still gives you better returns than the stock market, and Bitcoin does stand the test of time against other altcoins. So let me dive deep into the into the charts and show you what I mean. Yeah, because you might not understand clearly at the moment, but allow me to explain it to you. So I'm going to give you 3 different reference points. I'm going to give you the pandemic low, I'm going to give you the last bull market high, and I'm going to give you the bear market low of this cycle. So we will begin. Yeah, and this is a DCA tool created by Benjamin Cohen. Benjamin Cohen is another cryptocurrency YouTube analyst. He is someone I do look up to as a mentor. He is a great analyst, and he's created this great chart that I'm able to use in today's video. So shout out to Ben. And it's essentially a metric that allows you to essentially see how your portfolio would look like if you was to DCA into Bitcoin at a specific amount, how often you were to buy, the day of the week, and when you would start and when you would end. I'll leave the end date as today. Yeah. But the start date I'm going to change to these days accordingly, and trying to spot any patterns that I can explain to you guys with regards to altcoins. Now, I've already explained the S&P. The S&P guarantees you 10% on a yearly basis, but Bitcoin alone is a lot better than that, and it is a lot better than that in comparison to altcoins, even though altcoins might return better than Bitcoin in the short term, and I'll explain why. So if we started from the pandemic low, these are all the altcoins, guys, that I've included in the list. I've got Ethereum, BNB, Solana, XRP, Cardano, Dogecoin, Chainlink, Matic, Litecoin, and Stellar Lumens. XLM. There are a lot of cryptocurrencies that were created when Bitcoin was in its infancy stage, so 2013 onwards. But the reason why they don't make this list is because a lot of altcoins just collapse against Bitcoin over time. Yeah, no one remembers cryptocurrencies. When I say cryptocurrencies, I mean altcoins. No one remembers altcoins from 2013 onwards. That's just a fact. Yeah, and there's even some altcoins from 2017 that no one remembers, and that's also just a fact. There's only you can only count the number on one hand the amount of altcoins that survive multiple cycles. Yeah. So for example, Ethereum. Ethereum is one altcoin that has stood the test of time, just like Bitcoin. And against Bitcoin, see, the thing is with altcoins and Bitcoins, you know, altcoins at best oscillate against Bitcoin. Yeah, against this Bitcoin pairing. At best they oscillate, and by oscillate I mean they go up and they go down, they go up and they go down. They don't just continuously go down in a stochastic process. But for example, no shade, but for a cryptocurrency like XRP, where XRP has been around for many years and a few cycles now, XRP just trends down against Bitcoin. Whereas a cryptocurrency like Cardano and a cryptocurrency like Ethereum, they oscillate. Now let me just actually show you the chart, because it's always good to verify. So this is the Ethereum chart against Bitcoin, and you can see that over time Ethereum is in this uptrend against Bitcoin, but it's also in this downtrend against Bitcoin. So it oscillates, yeah? Whereas if we take a look at Cardano, Cardano is also another altcoin that has stood the test of time of multiple cycles and also oscillates, where it goes up, down, and most likely going to go back up again. Yeah. But if we take a look at, for example, Bitcoin XRP, here we go. So if we actually make the chart a lot bigger, you can see that the XRP Bitcoin chart has legit just been going down since May of 2017, and it hasn't really moved anywhere. It just goes in a straight line. There's no clear direction with the comparison of prices. There's no oscillating process where you can see, I can rotate Bitcoin into XRP because XRP is going to clearly go up, and then I can rotate my XRP back into Bitcoin because I know that the Bitcoin pairing is going to go up. Do you know what I mean? But let's get into the DCA tool. So we're going to start from the pandemic low. which is this point in time right here. So let's see what the returns would be if you were to invest $100 a week every Monday starting from the pandemic low. So you can see that Bitcoin is up by 97.5%. There are two altcoins that are actually down by 10% if you were to invest $100 weekly, and that's XLM and Litecoin, which is just disgusting. Yeah, Litecoin is another one actually. If we check Litecoin and divide it by Bitcoin, you can see that Litecoin Bitcoin is just one that just bleeds disgusting. Look at this downtrend. That is so bad. So bad, so bad. But if we take a look again, Bitcoin is up 97.5%, so you'd have doubled your money. All the other altcoins above would have performed significantly better, but as I mentioned previously in this video, that a lot of the short-term altcoins that were only just created in last cycle will of course have a better effect in the short term. The longer the cycles go, the longer that Bitcoin outperforms the altcoins, yeah? Even if they do oscillate, because altcoins oscillate at best, yeah? So you can pause the video, you can see the returns, but if we take a look at Bitcoin at its all-time high, if we see the date, which was November 2021, so if we change the starting date to November of 2021, we can go to, come on, it was around the 21st, let's say. You can see that Bitcoin has increased in the list, yeah? And you can see that a lot of the altcoins are now underneath Bitcoin, and now there's 4 altcoins that would have given you negative returns if you were to DCA the same amount every week, yeah? The only 2 altcoins that would have outperformed Bitcoin during this moment in time if you were to DCA then would be Solana and Chainlink. If we now change the date to the bear market low, which was around the 21st of November 2022, so just a year on later, you can see again that the list is pretty much the same, where Bitcoin is third and Solana and Chainlink have returned better. But with that being said, Solana has had a monstrous last few months, especially with Bitcoin going up. And the thing is with cryptocurrency, guys, you know that Bitcoin isn't going anywhere, whereas with altcoins you know that there is a danger. Bitcoin has stood the test of time, and the thing is that altcoins do not move unless Bitcoin makes the move first. So the reason why altcoins, especially Solana and Chainlink, have had these massive returns is because Bitcoin made the move first. If Bitcoin doesn't make the move first and Bitcoin does this, yeah, during the bear market, then you know that altcoins are in big trouble. Now you can cherry pick this data somewhat, because if I was to, let's say, put in a time frame that from the high of the last bull cycle to the low of the bear market, let's actually see that. Let's actually see, because I don't want to say something and it turns out not to be true, but let's actually see. So if we take it from November 21 and we then do it to November 22, go back to November 22, literally just a year on later, I think Solana would have been better, because Solana bottomed out and a lot of altcoins bottomed out in June of 22, but it's not letting me. Here we go. Yeah, again it's Solana and Link, but the majority of altcoins were actually down quite a lot. There was only a select few. You have Bitcoin and you have ETH. Bitcoin and ETH will always tend to majority of the time be green if you are to DCA over time. Whereas Solana and Link, because they had such distraughtful bear markets, if we actually take a look at the Solana chart, because they had such bad bear markets, where Bitcoin recovers and Bitcoin actually puts in an uptrend, these spring up the most. But the thing is with Solana and Bitcoin, we need to know if Solana can hold its lows against Bitcoin. Because if it can hold its lows against Bitcoin and it does oscillate, then Solana could be a viable option in the long term if it were to DCA. But we do not know that as of yet. Solana needs to survive multiple cycles to be classed as an altcoin that can stand the test of time, just like ADA and just like Ethereum. Yeah, so this tool is actually quite interesting because you can play around with it, you can add the amount of dollars, it tells you legit like each transaction that you make and when you'd be in profit, and you can see that you can spend large amounts of time in a loss, but then over time that loss becomes green. So over time your DCA technique will always work, and just give it a few years, even just $100 a week, you will become very successful and very rich within the cryptocurrency asset class. So that's it from me today, guys. I hope you all enjoyed the video. If you did, make sure you hit that thumbs up, hit that subscribe button, and as always, it's been your boy J1 General. Thank you and goodbye.